guys, this is AA James and welcome to Friday 600 Seconds with me, your senior trader and financial analyst at Dazzly FX. Today is Friday and we are talking about exposing secrets in the financial market, in the forex market. We're making those complex secrets, we're making them very simple to understand. But before we get started, subscribe to our YouTube channel and turn on the notification button so that when we upload videos like this or content like this, you will be notified, and YouTube can also recommend us to other people because of the valuable content that we are actually releasing. All right, so without further ado, let's get into the business of the day. Moving average cross with candle patterns. Moving averages, like we know the name average. Average is addition, then division. That is moving average. You add a particular set of items and you now eventually divide them by the number of those items. Okay, so this is a daily candle, or this is a daily chart here. This is a daily chart. So now when each candle has the open, the close, the high and the low. Look at it here, the open, the close, the high and the low. So if we are talking about moving averages, right, so we can decide to pick the close of this candle, the close of this candle, the close of the past 10 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the close of this past 10 candles. Okay, and when we know what their closes are, their closing figures are, we're not divided by 10. So the market automatically, or the chart will automatically plot that particular figure. And because after today, when the market opens again on Sunday night, you will have another candle. By Monday night, another candle. And it continues like that and like that. So the close of every candle increase the length of that particular moving average. Do we understand? Even if you use the open, it's the same thing. If you use the high or the low, it's all the same thing. All right, so that is moving average. So now, how do we use that to trade? For example, this moving average definitely will be coming down because the candles are closing below. So by the time you are adding the closing of each candle, it will keep forming down, it will keep coming down, it will keep coming down. Do you understand? Now the same thing, if the candles are going up, by the time you begin to add the close of the candles, your line, your moving average line, it will go up. Right? So now, how do we take advantage of this to get into a trade? Very simple. There are several trading strategies regarding moving averages, which we will be releasing in subsequent videos. Okay, but for the purpose of today, right, we will be looking at just moving average cross. And when we speak about cross, that means there have to be two. One is crossing the other. Okay, so now we're going to be looking at a short-term moving average plus a long-term moving average. So we're going to be using 21-day moving average, or 21 period moving average, and we'll be looking at 10 moving average period. Okay, so that means when D10, which is the shorter one, crosses the 21, which is the longer one, it gives us a signal that a trade could be setting up. Okay, so without further analysis, let's go into the chart itself. Now let me tell you this, indicators work. Forget whatever jargon anybody is saying anywhere, that indicators don't work. Banks use indicators, institutions, they use indicators because indicators helps you to eliminate the discretionary factor. I mean your emotions. These subjective factors is eliminated by an indicator, or by indicators, because indicators are mathematically and statistically calculated. So banks use it. Guys, do not let anybody tell you that indicators don't work. They do. They don't work in your hands if you have not studied how they work. Okay, so let's get this out of the way. So now we have the first indicator, which is the 21 moving average. You go to your indicators here, you type moving average simple. That's the first one you're going to click on it. It will appear. Okay, that's all. Then you come here again, indicators. You now look for the second one, exponential. The first one is simple, the second one is exponential. Click on it. All right, good. So now come to the simple. The simple is going to be what? 21. Then when it comes to the style, we can make it like a bold, the third layer of the bold. Okay, that's all. Blue color, any color you want to choose. Then we'll come to the 9. The second one, we'll change it to, let's say, red or whatever color you want to choose. Make it the second layer of the bold. Then make it this 10. Okay, so good. What does this mean? The red signifies the 10 and the blue signifies the 20. Okay, so you will notice that the red is closer to the price. Even when price is going up, the red is closer to the price. When price was going up, the red is closer to the price. Anywhere you see it, the red is always closer to the price. Okay, so now let's take a look at some examples. By the time the red crosses the blue, there's a signal. So how would I get into the trade is when you now have a candlestick pattern. So what I will do is I will wait for a bearish engulfing candle for the sell side or a bullish engulfing candle for the buy side. And this is the strategy. Very simple strategy. Number one, when you open your chart, look at the daily setup. If the candle is below the 2 moving averages, then you do what? You place your vertical to wherever the market crossed. Okay, so just like this now, but I'm going to start from here because this was where the market crossed. Okay, so you move down to 4 hours, or you move down to 1 hour, or even to 15 minutes. The only thing you'll be looking out for is selling opportunities. Why? Because the daily is selling. Okay, so now let's get down to 4 hours and let's see what happened here. By the time market crossed here, look at this, ladies and gentlemen. This was where the market crossed, and we crossed with a what? With a bearish engulfing candle. Let's assume this is it here. Okay, we crossed with a what? With a bearish engulfing candle, and by that you enter at what? Market execution. Market execution. So your stop loss is going to be above the highs here. Above the highs, you can have a few pips above the highs. 75 pips. Yes, good. So 1:2 is going to be what? It's going to be 150 pips. Okay, great. So by the time the market gets to 1:2, you can take out your profit and leave the other one running. All right, good. So now let's see, ladies and gentlemen, let's see how this market will move. Boom, you see it, market hit our target. Did you see that? I could have gotten in some other places, but they are not bearish engulfing. But when we have a bearish engulfing candle, market went straight down to our profit. So when you hit 1:2, for example, if you're risking $500 here, by this point you're already making $8,000. So you can take some money out and bring your stop loss to your break even. All right, that's the risk management and trade management, which I'll be treating in subsequent videos. Okay, but for the purpose of this video, we're just talking about the strategy and how to get in and how to get out of the strategy. Okay, if you have been on this trade, you would have made something like what? 8.27 risk to reward. So if you're risking $1,000 here, this is already $8,000, right? So now let's look for a bullish example for this. Now for the bullish example, this is AUDJPY. Okay, now we have AUDJPY on the daily chart, the same thing. All right, this is when market crossed. Now let me tell you something here. On the daily time frame, the candle that the market used to cross does not matter. No, it doesn't matter. It's your entry time frame that requires a bullish or a bearish engulfing candle. So now let's put our line here. This was the particular candle that broke it again. This was more like, you know, a continuation trade. So let's go to 4 hours and let's see the trade opportunities we're going to be having on the 4 hours chart. The red line has not crossed yet. Okay, so by the time we see this, now look at this, the red line crossed, bullish engulfing candle. The red line has already crossed the blue line. Okay, so we are good to go. Now what do we do? The same thing. You take your trade at the close of that particular candle. All right, so now you put your stop loss below the lows. Let's make it 30. This is 30 pips. Okay, now the take profit is going to be 60 pips. All right, good. So now let's see if market is going to respect our trade. Boom, guys, in just few candles market respected our trade. All right, so and let's see what now happens later after that. You see it, market kept going on. You see another bearish bullish engulfing candle here. Okay, market kept going on. Markets just kept moving on. Woo, ladies and gentlemen, even if you got into another trade here, all right, you will still make profit. 1:2, you're out. Okay, so this is another bullish engulfing candle here. Look at it. As many as possible bullish engulfing candles you have, you keep, you know, getting into the market. All right, you keep getting into the market. As many as possible bullish engulfing candles you have, you keep getting into the market. So now, why do I have the confidence the market is going in my direction? Because on the daily time frame, market is already bullish. On the daily time frame, market is already bullish. Market is already bullish. Do you see it? Now, if you notice, I did not take this particular trade. Why? Because it did not cross into the moving average. But all these ones, they crossed into the moving average. So it's more like a retesting. They're coming to retest. Okay, so by the time market crossed back at this point here, by the time market crossed back, this guy had already given you 1:17. This guy gave you 1:4. This guy gave you 1:5, and this guy gave you what? 1:4. Okay, so all this trade I give you 1:30. If you're risking $100, this is like $3,000. All right, take your time to back test it. Back test, check and check and check and check. Your analysis time frame is the daily time frame, and your entry is the 4 hours entry. That's going to be it for today, for this session. Thank you very much for tuning in. Remember, once again, if you have not subscribed, kindly click on the subscription button and turn on the notification bell also, so that you can get notified when we drop the next one. All right, guys, thank you very much. See you in the next episode. If skin no fool, come on, body. Thank you. Bye bye.